Apple came out with earnings this afternoon. It's November 2nd, which blows my mind. I'm still in March dealing with the banking meltdown that we saw and probably will see more of. But Apple reported, and I'm sitting here not knowing much about what their earnings look like. But I think it's their guidance that was very weak. And now the stock is down from a close of $77 was 177.57 this afternoon, and it is presently trading at $171.66. So that can't be great. So let's just go check out the charts. I'm going to apply the things I've learned from Mark on the swing trading channel. That's the platinum channel, which teaches swing trading, along with Kerry's portfolio and Mark's long-term outlook on the stocks in the bus portfolio. So let's go to the Apple chart and check out what Apple looks like. So I'm going to start with Apple from a 1 month period of time. And why am I doing that? Well, I think you should look at charts from a monthly, weekly, daily, and then get down into the small, intraday stuff. But what monthly tells me is where it is in its overall long-term trend. And as you can still see on a monthly chart for Apple, it is still pretty sizably above its 200 period moving average. Now, it's entered this area of resistance where there is a lot of potential selling happening. And over the last, well, what, 1, 2, 3, now starting 4 months, month of November that is here, we're starting to see this stock pull back. And the question is, will it break through this 200-day? Will it come down to this 200-day, which would be really significant at $114.71? And right now it's at, well, aftermarket, it's at 171.32. Wow. And so my question is, are we going to see it hit in this monthly area, maybe a support level around 153 or so? But when I look at the stochastics here, I see this is turned down, Tesla or Apple turned down about a month ago and has started to decline. To me, this is a hands off, step back, wait and see, take my profits if I have them. And then you're seeing it in the MACD. MACD is more of a long-term, slower indicator. And you saw this breakdown in the MACD back in April of 22. So it's been on a sort of a weak trend. It tried to recover starting back in May of this year, and it basically has fizzled out. And from a viewpoint of the MACD, we're starting to see it break lower, and you're looking at your histogram, and we're starting to go negative there. That's a monthly. Let's go check out a weekly. Now, on a weekly chart, I'm going to get it here. Here we go. On a weekly chart, we saw that massive move up from in January, the start of the year, and it made a pretty nice move. Well, a really nice move from like $130 to roughly peaking out right around 195. But since July, it has just gone down every week and made an attempt back on the week of August 28th. That broke down and has then continued to go down. And I suspect the earnings that have come out, I haven't delved into it, and I'll before the end of the video, I'll just go over that with you as well. But I think Apple is on its way south in a bigger way. Here's the thing, what I'm looking at here from a weekly standpoint, the 200-day moving average, it broke through it right around the September 11th week. It tried to recover and break back through it the week of October 9th, and it has failed and is starting to move lower. And I suspect when market opens tomorrow, you're going to see this thing down in the 170s, if not in this 160 range. Now let's look at a daily chart of this. And this is a daily. Let's just squeeze it up a little, give us more perspective of what we're looking at. Once again, we're in that below 200-day area. I'm just going to shut this off because it's annoying. We're below the 200 period moving average. It made a move today to try to, it gapped up. And as you can see, it's gapping down in aftermarket. So where does Apple go from this perspective? Let's just get an idea how big of a gap this is. Aftermarket, this is aftermarket. To adjust this. This is trading views. And if you're not using trading views, I would definitely highly check it out. This is coming from a guy who has always been a stock charts guy. So anyhow, you can see this gap down. This is a 2-hour or 1-hour chart. And market Apple closed at the 177.53 area, and after earnings it just has gapped down and presently is at 171.30. It's been as low as today or in aftermarket 169.33. It hit that 200 period, I guess you call it 200-hour moving average. It bounced off that. There looks like a little support in this area, but you look at the MACDs on an hourly and everything's negative. Let's go back to the daily and check that out. And what do we got? MACD was trying to make a move today. It looked like it was trying to break through. Stochastics made a move higher, broke through that 50 mark or so today as well. But then they come out with earnings, and well, if market opens up with Apple down like it is, these indicators, MACD and slow stochastic, will be negative, will go south again. And I think it will also definitely see a breakthrough the 50. We'll see a breakthrough the 20 and breakthrough the 9. And so if you bought into this today and you wrote it into earnings, this is one of Mark's biggest pet peeves. Do not own or swing trade a stock in as you're coming into earnings. Don't ride it through, because this situation, depending on how this works out tomorrow, based on what that number is now, this is not going to be really a great situation if you bought into this today. So this is where risk management comes in. This is where patience comes in. And this is where learning to swing trade, not just on a daily or weekly basis, but applying the swing trading techniques that Mark teaches in the Platinum channel and applying it to the long term. I mean, right now, if you're just looking at this, you take one quick look, this is your 200-day, that big purple line, and it's negative. If you follow like some of the legends in the investment world, like Paul Tudor Jones, he makes a lot of decisions based off that one line. It just makes a lot of sense. And the markets focus on that as well, because everybody's focusing on it. So I suspect we're going to see a move further down. And where does this head to? Your guess is as good as mine, but I'll take a guess. I believe that Apple is so big and is in every index out there. It's in the S&P, it's the big S&P, it's the big NASDAQ, it's the big Dow position. It's in XLK, I believe, is the tech ETF. It's a big position in that. Think about every 401k plan that is holding an S&P 500 index and how that is going to be affected when Apple opens up, and probably will move downward throughout the rest of the week. It's going to be such a drag on the market. And that's where I think you got to look at your process when it comes to investing. Even if you're a long-term buy and hold, it makes no sense to lose money when you don't have to. Simply putting the strategies, the tactics that Mark uses in the Platinum Trading channel, this can save you a lot of money. And I believe we're all going to be wondering tomorrow morning when the market opens up at 8:30 Central, 9:30 Eastern, where this market's going after Apple's earnings here. So take care. Hope this has been helpful, and hopefully you can apply some of these techniques to your investing. But check out the Platinum channel. It's $60 a month. You get a ton of stuff in it, and we're continuously adding new services to that platinum channel. All right, take care, live loud, and peace be with you.